Hi guys, hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinars. Can you guys hear me clearly? Yes or no? Just give me a thumbs up, guys. Okay, thank you. Thanks for your responding. Okay. Okay, so today topic you already can see on the screen. We will talk about killing time zones. Okay, so I think today topic is quite just talk about the time zones, and after that I'll bring you guys to the light chart, and then we're gonna find the key level together. Wow, just now I was looking at goal, right? It's okay. While we are waiting, okay, for everyone to join, I'm gonna show you the chart first. Okay, I was looking at the XDUSD. It was ranging, and then you can see that this is the 1 minute candle. Okay, I have to tell you like nowadays, you want to trade gold, I think you need to reduce your lot size because price, move more than 100 pip within like 1 minute or less than 5 minutes. You look here, right? From here it was ranging. Okay, this is my time zone. Okay, right here, which is the London open. This was the London high. It was ranging here, and then you can see like from this at 60, or let's just say it was ranging here. Okay, and let's just say was from 59 from here break all the way, you would see it's about 350 pip just within, or even like in this candle from just here 55 to 300 pip, from 1 to 3, just 3 minute price falling 300 pip from 3 minutes. Okay, so nowadays I trade gold, my lot size is reduced a lot compared to like 2 to 3 years ago, because 2 to 3 years ago I think gold like move per day is about 200 or maybe 100 or 150 pip, or if there is a like high impact news, it's a move about 300 and maximum like 400 pip, right? But nowadays per day go move about 800 to 900 pip, and in a lower time frame, last time they move about 30 to 50 pip in the M1 or M5, right? But nowadays you can see that I just showed you guys it's move more than 100 pip within like M1 or M5. So yeah, you need to like reduce your lot size. And just a chit chat before we start, a lot of the new trader, okay, they just join, I mean they just enter to the forex market like 3 months ago, or even less than that, or less than 3 months. Most of them, I can say like 80% that I saw online, they were kind of like, posting that they lost their account, they lost their saving money, because now gold is, a lot of people who buying gold like today, right? We buy, and then you can see the gold is just boom selling off like today since the Asian action. Okay, guys. So webinars today, killing time zone. Before I start the webinar, disclaimer first, right, guys? The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. And risk warning: our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. This product may not be suitable for everyone, and you should ensure that you understand the risk involved. Okay. And about myself, my name is Peggy. I'm an investment analyst and a prop trader. Okay, so this is the agenda for today. So define Q zones in Forex, major ICT Q zones, why Q zone, the time zone matters. how to use Q zone in ICT and live example. You asked about the Q zone. Basically, the Q zone is specific time window, okay, when institutional traders are most active, period of maximum liquidity and volatility in the forex market, which is just now if you were to look at the chart. It's what after the London session open, and then you can see that gold move 350 pips. That's what is the institutional already in the market, big boy in the market that sell gold. Okay, high probability setup occur when smart money enter the positions named Q zone, because this is when institution Q retail trader by triggering stop losses. Based on ICT or inner cycle trader methodology developed by Michael Henderson. Okay. Here, we know about the Q zone. We have 3 time zone, which is called killing time zone, which is Asia. Okay. So it's like 8 p.m. to 12 a.m. Eastern time. Okay. So the more active for the Asia, I think it's suitable for me because I'm based in Singapore. So my time zone, I think this is much suitable. I can trade in the Asia section like Tokyo or Hong Kong section open, low volatility but set up range for later session. Best for JPY, or you can like also best for Aussie dollar and Kiwi dollar pair. Okay. Now, London session, I think it's the more active, it's my favorite session as well. Okay. It's open from 2 a.m. to 5 a.m. Eastern Time. European market open and high liquidity. Major directional move often begin here. Best for EUR, GBP pair, and the breakout strategies. I think gold, we saw the breakout. Yep, we saw the breakout. Yep, let me see. Okay, I think it's the breakout. And the New York Q zone, 7 a.m. to 10 a.m. Eastern Time. Yes, market opening, highest volume of the day. So I would say that 80%, 70% I'm active on the London section, maybe Asia section, maybe 10%, because sometimes Asia section is very volatile for me, especially like today. Okay. And the New York section, I will trade like 20% because the market open is already at about 8 p.m. my time zone. So usually I already resting. So I could say that I have heavily active on the London section. Okay. And you can see that London and New York overlap create explosive move, best for all major pair and trend continuation. Anything that pair with US dollar, right? And then the US section, there's a lot of high impact news as well. So sometimes I just don't want to trade. Okay. So now you need to know how to look at market structure. Of course, on the higher time frame, if you were to trade, you need to look on at least H1 and H4 to look for market structures, because you can look for the institutional order flow, okay, concentrated in specific hour. Algorithm driven entry occur at predictable times. Bank and hedge fund move size during this their business hour. Liquidity pool. Usually you will get stop out or stop hand at where for the retail trader, we usually place stop loss at the either equal high or those are resistance level. Maybe sometimes you pull back here, you sell. And then if there is an OB here, okay, usually we get stop loss and then price falling. Okay, major liquidity happen in the Q zone. Q zone, you wait for the market open, those like London or New York or Asia section. Okay, retail trader get trapped outside those window. Okay, here, if you want to use those like the where is the here, hang on, you go to the trading view, right, and then you look for this where is it? You can look for this indicator, okay, here, because they will tell you, okay, they will tell you like, oh, okay, they will tell you that which is what session is this, but I think it's you need to go down to the M15. Okay, let's see here. Okay, you go to the indicator, you search the ICT. I think the popular one, a lot of people are using this one. You see like 31.6K. I'm using like 14.2. If you're to use this, the difference is just that they will tell you like the Asia high, like the Asia low, London high, and London low. So it's up to you. Okay, based on here, breakout, right? This was the New York low right here, and this is the Asia high. You can say Asia sell, okay, and then they buy up, and the London high they just sell up. They just sell up. Go, and price has broken Asia low. Okay, so if you want to sell, this will be your sell zone at 60. Okay, if you want to look for the key level, this was the support level, but now we have about 17 minutes, okay, for the H4 to close, right? If the body is closed below, meaning that from this it's gonna be pulled back and then you sell, right? 50, 52, which is where you see that, which is the London section. This was the support level in the H4. London open, push the price break below the support level all the way down. So this is the London section, London low. This is London high, and this will put the price up. So if you want to sell, let me see, price pull back here, you may continue to sell. Okay, because on a high time frame, this was the support level, the body. I will just put at the body. Okay, and you see that we based on here, this just like, I know that you will get like stop out because of like this week. From the week is more than 100 pip. From this week you can see that just from this week to here 8,000 or 800 pip. From the week to the body, like the week to the body, you see that 5,000. You can see that. So definitely we got the little trader, you will get stop loss based on the week, and then price close above, and now buy again, right? And now you will see that it hit for closing. Okay, this is the London low. You need to wait for the pullback, right? The pullback, and then you sell. Well, I will put here, right? This is an imbalance, price break, maybe pullback, you sell. Okay. And now you also can see that they make the BOS. I will say this is a BOA break of structures. Okay. They will see that. This quite useful tools if you were to see here. Okay. But usually I don't use this one because like I don't like to see this. To me, this is good enough. Okay, this is good enough. This is just Asia high, low, London open, London low here. And we have the supply zone here. So you want to sell, okay, you wait for price to pull back around these zones, right? Okay, because the New York PM, this is New York AM, price make a 141, which is Saturday. Okay, okay, you can look here as well, right? You can see that. That's what the New York open, Asia. Okay, it was ranging. and then after that the London Asia buy all the way up, break above the New York section, and the London come like selling off, and then it was sideways somehow, the like here for the section. After that they break above, right, and this is a New York high in the AM morning. After that you can see price slightly make falling and follow the like London session, sell off, sell, buy and sell. This was the high. New York PM and Asia high like almost the same level, the price, and it's like, you know, sell off here. London came in, also sell off, and this is the support level. Okay, at 4 PM in my time zone, that was the London open, and then you can see the price action with the support level. That's why you can see people buy, break above and close out, break above the London high. Okay, all the way to New York open. New York will open at around this level, push the price all the way up, and then you sell long off. Okay, you can look here. So now price is rising, so you may consider to sell. Okay, so back to the step by step trading process. So first, identify the Q zone for your time zone and trading style. Okay, so if you want to use the indicator, you need to go down to the M15. If you go to H1 and H4, you kindly look for the time zone, right? I think you need to go down to the M15. Okay, mark the Q zone hour on your chart with vertical lines. Wait for the price to enter the Q zones before considering trades. Look for the ICT setup or the block, fabric gap liquidity, voice. Okay, confirm the market chip and break of structure, chain of character or market structure. You can wait for that. Enter on optimal trend within the Q zones. Now, let me see. Where is my chart just now? It is here. All right. Now we are in the London. Okay, price had closed below, break below. Now we wait for price to pull back. If we want to sell at these zones, okay, I want to go down to the lower time frame. What we need to look, you need to look for the OB, right? The order block. I would say this could consider the OB, or I could say supply zone here. Okay. I go down to the, okay. I go down to the M1. Okay, based on the M1 time frame, I would say okay, price like make the higher low. It might go up here. The reason this they like the people some sell here because they might say this is a FVG or fabric gap. Because of this impulsive move, boom, break below, right? So now I want to see price rising to this level, like this box, and then I sell. But the thing is when I zoom in, okay, this one pull back by right, we have the OB here. I would say okay, this is my bearish OB, but this OB is taken because of this rejection here, like, you know. So I will always see the price rising here, and then I see the confirmation. I might sell. Okay, at 16.8% to support our this level. Okay, for the OTE, optimal trade entry have to be at least at this level from 61.8 and 78.6. This is gonna be the OTE, or like the zone that you want to sell. Okay, guys. Or you can use like premium and discount zone at least above 50%, and then you may consider to sell. Okay. So now let's look for the setup. Let me open this. I go on a higher time frame first to look for the key level. If body close above the next hour, I'm going to look for the sell entry. Okay. You see that? It was ranging. Price was sideways. The body close above. Now I think it's gonna close below. I go to M H1. Okay, based on H1 time frame. Oh, I think I'm gonna use the why I cannot see. Okay, let's look for the setup. Oh, this one was the last, when is it? Long time ago, right? That was the setup. Let's highlight the key level. Another 7-minute to H4 to close. Okay. This was the first resistance. The next zones that I would look for the buy entry. Let's look for the OB. There's no OB here. Okay, bend in H1 closed here, but there's still like the body in H1 here. Right? That was the low. I would say that is the next potential support level. Okay. Until 7. I will go to the okay. When you look like this, what do you see? You will see like break of structure, break of structure, break of structures. And I would say that zoom in here. This is my, like just say my OB here. Bearish OB. So whenever price come to these zones, you may consider to sell. And then our zone also line up with 61.8%, somewhere around here. Okay, so I leave 61.8 the zones. Okay, it pull back, we sell. Here's no OB, but let's just say this is a price could it pull back here, either here or here or here. Okay, and then you're gonna sell to this level. This one is just a pullback. So price might come and clear liquidity. No, like clear like the support level here, right? I mean, like clear the stop loss, and then might pull back, and then you continue to sell. You see that? Better M15. I know that there will be some people who buy at this level, and then you get stop out, right? So this one is gonna be your zone to sell. Okay, very lovely. Let me look M15. Okay, there was a OB here, right? But you see that it's taken. It's taken already. Here. Because of this candle. You can see the wick. So it's taken already. I'm not gonna identify, but this gonna have another OB, bullish OB. Okay. That's why you see that price had rejected. right? Do you see that? Here, on your left, this OB had taken, and you can have another OB here, which is still fresh, right? Based on this body and the wick here, when you go here, you see that price had rejected. It's so quick because this is the OB on demand that people were waiting to buy at 25 all the way 250 pip. From this rejected M5 5-minute candle 5 minute. Okay, you can see that this 5-minute candle less than 10 minute rejected the zone and price falling. Okay, you look to the left whenever you want to buy the zone. Whenever you see the OB, if OB is taken, like there's a wick already go in the box, you don't trade. You will trade when you see the fresh OB. Okay, at least M15 is still fresh. You can just mark out. You mark, then you see, right? You can buy. Now, I know this really quick. I don't think you're gonna see those like any in M1. You just see the rejection, and after that, boom, 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 right? From here, like if you were to buy, you see that it's about 200 pip, and now price is sideways. So best you wait for price to come to this level and then you sell. Either I don't know, it go up here to this level. Okay, sell at these zones. Yeah, I think it's gonna be sideways right now in the London section. Okay, this M15. This is the setup. Okay, and let's say what if price did not respect here, but based on market structure here right now, I already said this is already chain of character or market structure. Okay, from this price gonna pull back to make the lower low, lower high, lower low, lower high. Okay, based on the M15. Let's go back again. I have 1 minute. I think H4 is gonna close below 40, 62 or 50. So the next hour, look for the sell entry. And this was our sell entry here at this level. Okay. Any question, guys? That's clear. Okay, you choose. Okay. I know that like there's so many like which strategy should I trade? Like I tell myself I don't trade with FVG or fair value gap. Okay. If you want to identify the FVG based on M15, this is gonna be your FVG or fair value gap. Yeah. Okay. Right. You will see the rejection. So I don't trade with FVG. I'll trade either OB or the block and the demand supply or support resistance. Okay, I don't trade with the FVG unless my level, if I want to, let's say you want to buy here. But to buy here, you see that, oh, there's a FVG, then I just highlight and then I might buy. But let's say I buy here, price is falling to more than 50 pip or another 50 pip, I buy again, price rising. You can see that 230 pip. From this, you hold, right? From this and you hold 200 pip, let's just say 220 pip for gold, right? You may look like so little. No, whenever you measure, you will say that. Okay, then you close, right? I have a setup fail today as well. I was expected that okay, gold gonna make like based on the M5. Okay, based on M5 here, I was the candle look different. Maybe somewhere around here. This was the no, somewhere egg. Okay, it's what here. Okay, I will just trade with. I was just okay. I buy here. This is my wave 3. I would think okay, this is gonna be a little wave, right? Pull here and then go up there to the OB here. I would aim for this. And then I use the trend line. That's what in the Asia. I would do like that. Okay, and you can see that based on this level, my wave 4, I thought this is gonna be my wave 4 somewhere around here, but now it's here, meaning my 11 wave failed because wave 1 wave 2 cannot overlap, right? And you can see just slightly rejected from this, and after that price go all the way and hit stop loss. I go hit stop loss for gold, okay, for one, because I buy here. Actually it's already positive. From here to here, it's almost 100 pips, but I did not close. Then it was like sideways. Okay. Sideways now, like sideways here for the HS section. Okay. Like somewhere around here. And then break below. From this level, I got stop out. I buy again at this, so I cover my loss. Okay, from this. And after that, because price did not close below the support level, which is at 40.50, and after that price come down again based on the H1 right here, and then right here I thought okay, price pull back, I have another buy entry. Okay, I have another buy entry on more time frame. I think I bought gold at this zone. This zone I got stop out. Okay, this one was stop out and I was at the M1 that time. Okay, price falling. Okay, at the rejected here, I did not close, falling within the zone, right? A little bit I hold. Okay, and after that, within like 1 minute, 2 minutes, and the same one, boom, it's a London. So actually, okay, whenever I read the candle from here, I still buy, okay, based on the zone. I see this in my price action, buy, I hold. Okay, this nice bullish candle. But whenever I see this candle close like that, close like this, okay, this is not a good sign, okay, because for evolutive candle, in order for them to close like that, they should just maybe close with the bullish. Then I will consider to hold like from this buy entry to another 40.80. That's gonna be like my sell zone. This one was my sell zone though, that's like 770 or 80. Okay, but then falling from here, I positive, I didn't close. Falling again, okay, I still hold, come back here, right? You can see price falling, and of this candle, whenever I see break like this, I did not close. Then I get stop out. I put my stop loss at 49 because my support level at 40.50. I put my stop loss at 49. I got stop out, and then price all the way. Just now I buy here for the rejection, so I did cover my loss a bit. I trade two account. Another account I did not. I trade another account, the big one, so I still get like recover my loss a little bit. So yeah. So then I look. Let's say you get stop out, then you go to the M15, like just now I show you how to look for the OP. Okay, this sell fresh, then you will get like recover your loss here. Now my plan, I'm gonna wait to sell at this level. Okay, even to look under D1, buy right. I remove everything first. By right, today we also have to look for the buy for the sell entry. It's just that price is at the support level before the London open. Okay, it still respect on the lower time frame. Okay, now this one would be the support level for D1. Okay, you look here, price all almost, go to the closing candle on the Friday. Let's just say this was the closing. The price was, let's just say 4112. Price all the way 4109. From there, people just sell off and move. Right here. That's what is like at night. That's why at night here, right? You see there's a gap down. Okay, there's a gap down here. When the market open, where is the gap up? Okay, gap down first. Why? This one, the 4112 is the closing price on Friday. Already I need to change the color. Right? So there's a sell limit. There was a sell limit here. That's why you see that when market open, gap down. Then after that, all the way and close the gap within the day, within like where is the price? Okay, within 5, 10, 15, 16, 5, 10, like 20 minutes. Actually, by right, if I were to look here, the gap is not closed yet, yeah? They still have the gap. Slightly, there's a gap here. Okay, there's a gap here. And then you see that New York, sell, sell. Okay, and this one was the price action. You buy at the support level, the Asia come in and then sell, follow the London section, New York section. You see here, right? This is your price action here. And it's what the resistance level. Yeah, why? New York PM, this is a New York low. Price go back up for the New York. This is I think the overlap. Okay, as my time zone is 6 a.m. in the morning when the market open, gap down all the way down to this OB. Okay, the zones. Initial I wanted to like, buy somewhere around here, but when I woke up about 7 plus, price had already bouncing from here, so I have buy entry here because of this price action. Okay, and there is like OB somewhere around this level, which is M15, which is here, right? Before like here. Okay, and then come back again and closing with bullet engulfing candle, like something like that. You have another OB here, right? Price falling. This one you can see the rejection. You can see the box, the OB falling, and this is your another demand. It was taken because of this one. Price rejected, closing with the bullet engulf falling. You can have another buy and then you hold. Okay, up to almost at 97, and then after that price falling, and it was sideways during the overlap, right? It was sideways here. Okay, look, M5 sideways, ranging, right? After close below, the body close below, close, pull back to the box, and then sell off. And this is London Open. Okay, guys. I like just if you okay, somebody. Okay, liquidity already took below 40-30 already, right? So it will go up. Yeah, 40-30. Yeah, I will just put exact. This is liquidity. This is H4, right? This is H4. You go to the M15. By right M15, you're going to look here. If you trade with the OB, you don't get stop out. You're gonna buy here. For little trader, if you did not look here, and you mark out, I go to M5. M5 is nothing. To me, it's clear where it will clear. This is the clear liquidity, which is here. You're gonna buy here, or you're gonna buy somewhere at the low here. It's clear because break. And the price go up from here. It's just the OB in the M15. I don't call liquidity here. Liquidity clear, which is this one. This is clear liquidity. Whoever play with the ranging market in lower time frame M5, buy, sell, buy, sell, buy, sell, buy, sell, right? You can see that after that it break, you can stop out and continue to go down. And this one is clear, the stop loss also. There is liquidity. Swing low. Okay. Whenever it clear, now it go up. I'm gonna sell here, which is just now the zone I tell you where is it. In the oh no. We're not gonna sell here. We're gonna sell here. If you want to sell here, you wait for price to clear liquidity at around this level first. Those are retail trader, this one they're gonna call it pullback resistance. Okay. They may sell here at 40, 55, 54. Those like psychological number ending with 0, ending with 5. But our sell zone is here. Somewhere around here. So this zone is liquidity. So it's gonna be like their money. Because we're gonna buy the pullback. So you may see slightly rejection and get stop, go here and then falling. You wait for them to clear this liquidity first, pullback resistance. Okay, and then we wait to sell at these zones. Now, this is the liquidity. Okay, guys. This is gonna be the liquidity already, this zone. Okay, this is gonna be liquidity. Let it clear liquidity first. Now I know that there will be people who sell here. A lot of rejection here. Okay. You get liquidity. I think now it look like the triangle M5. It's let me search. It is ascending triangle pattern. Okay, this is an ascending triangle. Let it break. Sometimes I know that a triangle, sometimes I can't really remember name. We just Google, you know. Don't worry if you cannot remember. I cannot remember. I will say I cannot remember. I'm a human. I cannot remember everything, but I know this pattern is a triangle. What's name is it's called. I will look like that. I will say, oh, this look like then it will look like this. Yeah, ascending triangle. Okay, look like that. Right? It look like that. You're gonna break out, pull back, you buy. So we can wait first. And now okay, one of the thing is that if you always say, okay, last Friday, let's say last Friday they have like New York section have very strong move on a price move a lot. Usually the next day on Monday the market will be very quiet. Okay, or if the Asia is move a lot, London is quiet, which is when was that? That time Asia move a lot, I think last Friday. No, let me go to the M15. And then when Asia came up, it was sideways. Oh, here. Yeah, here. Okay, you see that this was the New York PM, right? This is Asia open, kind of like, sell off a little bit and price come to the OB here, this zone. After that, price for the Asia session all the way up here, break the New York PM high, and all the way, if I'm gonna look here, either call this is the resistance level, right? Somewhere here. Slightly rejected from here, and after that, London was sideways. Okay, from the London open to maybe here, it was sideways. They don't even like close, like push above the Asia high here, or did not really like, push below the Asia high. It was just sideways until the overlap, okay, between the London and New York. And then you can see New York go push the price up. This is the AM, and you can see that sell. New York PM sell, Asia sell, London sell. Why? They follow the New York section. This was like the investor waiting for the New York to lead, right? Usually the New York section is the one who like control the market. Okay, you see that because a lot of the new US dollar news always in the New York section. Okay, sell. New York, Asia, buy, we buy here, Asia come, sell, pull back, London also sell. After that, New York came up and buy, and after that, sell. Okay, this to me, this one recently I'm using is quite useful for me. Last time I don't use. Okay, last time I don't use it. Okay, I saw the question. Hang on. Okay, let me say last Friday US market was strong, but today morning, market continue very strong in the index. That it means today will have downturn after break new high. You mean you're talking about the what index? Dollar index or which one? That's why Nasdaq and S&P. Oh, okay, let me look, okay. Let's just say S&P. I trade the index, but I can look. S&P 500, which is which one? Let's just look here. You see that? It's gonna be sideways. It's got a gap here. They are waiting for the New York. Oh, we have the FOMC coming this week. I think they might wait for that for the Nasdaq. Okay. You look at the based on the my technical analysis, I would say that is not, you can still hold until 1600. This is gonna be your take profit for the buy entry. From here, you might see a pullback. Okay, I will use the extension for take profit TP1. Okay, back to the answer. Dow after break, they break the new high already here. They break, right? Whenever they break, there will be people who buy still continue to buy. Up to here, you might see the pullback. Based on H4, I would say this is a BOS break of structures, right? From here, there was a gap. They might come down to close gap, I go to D1. Let me go to the D1 time frame. There was a gap, but gap up or gap down, it doesn't guarantee that will come. Okay, I don't know when they're going to come and close the gap, but I only can tell you that this H4, back to H4, this is a break of structures. Okay, FVG here, but if you were to hold your buy entry, you hold first. If you want to have another buy, you wait for the pullback. There might be a pullback and close this gap, but I don't know when. But we have the FOMC on 30, 29. Okay, they might wait on 20. We have the FOMC press conference, and we have the Fed fund rate. So I think we don't know whether he's gonna reduce or he gonna do what. So I think we need to wait. Okay, here. That is okay, for the S&P 500, I will just, hold to here. It will take time. We might come and close gap first and then rising more there, but yeah, nothing here, so you can still can hold. Another one is the Nasdaq. Is it Nasdaq 100? This one? Same, right? Whenever they break above the high, you see that when you go to H4, you can't see the Q zone. You need to go to M15. But let me look for the candle. You can see that break above, right? This was the low and the high. I would target first resistance there. About that zone. Okay. Now, you need to go to M15. Okay. This was gap up because today, my time zone is today. Saturday, more Monday, gap up, and then all the way down. Wow. Whoever buy, right, I think you will benefit for the buy entry because the gap up, but whoever sell from here, let's say okay, let's say last Friday, whoever sell because of the no, Friday, where is Friday? Friday here. Let's just say you were to sell here and the unit close, but then you say, okay, this is high, or time high already, right? You sell. Let's say you sell, you are positive and you still hold. Whenever you see the gap up here, even you put the stop loss where you put stop loss here. The gap up here, you will lose more than you set your stop loss because it's a gap up. This is gonna be the benefit the broker, right? Like you have a sell position, but if you were to buy, you're gonna get a benefit from the gap. Okay, back here, that's why I don't like to hold my position like overnight. Okay, unless you have the buy entry, you can, because on a higher time frame, price has already broke above this one, and based on this projection, you just hold your buy entry. You just hold your buy entry. Yep. At this projection, also have the extension. Same, exact. So this is gonna be your take profit. Okay. This is gonna be your take profit. From here, see whether price gonna close gap today or on 31st. Somewhere around here. But whenever price break, you should hold. Okay. All right, back to gold again. You see that? It was sideways already. Yeah. Whenever you go down here, now we need to wait for it to close. You see it break, no. Let it clear first. If it's clear, this liquidity, they might pull back, but this will be already taken. Let it clear this one first. But now it's okay. They might come back. I would say that this is a buy zone. Okay. Okay. Close. This one should be your buy entry based on the OB here. I zoom in to have a look. Okay. Yep. This will be your buy zone. Okay. OB here taken. Okay, taken. Another zone you can look, which is here with the M1. So you can buy here. This zone I am not in favor. We have the OB here. Wait for price to go to this first, then you buy. Okay. Like these zones. Can we buy? If I want to buy, because I want to buy, and buy because we want to sell here. Yeah. Okay, now meaning they might break. You see they're gonna reject from this. You're gonna break out. Break. Meaning that this one break. Rejected. Clear liquidity. The wick. This is all liquidity. If we want to like highlight. I want to look for the sell entry, but my sell entry was on this level. Like, where is it? Which here? The price did not go back up. Okay, based on M15 or M5. Okay, now let's say if it break, I'm gonna remove, yeah. Meaning that the zone at 45. Okay, this zone. Price cannot close above. Okay. Let I hide. Okay, now. If they break out in M5, because it was ranging, the body close above or close below, you can wait for price to come in the box to this zone. Let's go stop out. So basically, M5 was ranging based in the zones. Okay. Ranging. Just now, if we buy at the M here, you will get stop out, right? Because price clear liquidity close. Now it's pull back and sell. People sell, break out and sell. Okay, so meaning that it was sideways, breakout, the body close below, sell. First TP, the low at 23. Break out the box, right? When they say breakout, it's the body Please zoom. Okay, whenever you draw the ranging, you draw at the body. The body, you can see this body close below. There are gonna be lower time frame. You'll see there are pullback. Then the sell. There's no OB here for me. So if I want to buy, there is no no entry. If it got stop out, just now gonna stop out. Stop out when price break below the box, then that's it. Okay, I don't like to hold now. M15. When I see like that M15 closing with OB and price have already break out of the box. Okay. Wait for another M15 to finish. If price rise here, you sell. Okay. Now they have OB. So this is the resistance already. And remember that I say if price close below 40.50, we're gonna look for the sell entry. I thought that okay, price could like go slightly go up here or here and then we sell. Now you need to wait for the New York section already. Okay, because the London section sell was sideways. If they want to continue to sell, the next level I just put here for the next support. This is already my pullback resistance. Okay, this is the intermediate support that I'm gonna look at. Okay, so now if I want to sell, if I want to trade, I'm gonna wait for the London New York section. Or if price pull back here, I'm gonna sell from based on the OB, right? Now it's no big boy in the markets already. So now it's a retail trader like us. We just buy. Okay, and now sell, buy, sell right now, ranging. When we zoom in, you will see this is the narrow down the zone somewhere around here, M5. Okay. All right, guys. Any question? Any question? You try, okay, you guys try to use this killing zone toolkits. This is very useful. I think I have been using this like almost a month. Last time I did not use this, but after I use this one, okay, sometime, okay, I look at market structure first, okay, and then I look for the like a New York high or London high. Sometimes let's say if you buy here, I might say okay, this would be TP1, like at like resistance. Then TP2 I will aim for the New York high. Okay, at least like we use this one, you can see what is happening. Okay, how is like each section is like react or doing, right, for example. But for gold, right, for gold usually, okay, it's like that, but not 100%. Okay, usually it's London is the one who control the market or lead the right direction most of the time. If the New York buy, okay, sometime morning Asia also buy, sometime morning Asia will sell first and then buy later. Okay, so you go back, like you can go back and then you look like at each section, like how they're doing. Okay, so whenever let's say later, whenever you see the London or sideways, then you shouldn't trade. Whenever you see that, right, whenever I see that, I don't trade. Okay, I just maybe if I already buy here, you make a profit. Usually in New York section I don't trade as well. Okay, or sometimes you can see that it was sideways, or even you buy here, you can aim for the New York PM high. Okay, you can see that. Or If you want to buy here based on your price action here, you can just aim for your London Open here, TP. Because here, because now price really open, right? We really can see, but usually you might see, okay, this is the OB, bearish OB. That's why when you buy, you hold, you see the rejection, you already exit the position. Okay, right? After it break above, okay, it make a change of character, pull back here, continue to go higher to the New York AM 350 pip market open. After that, selling off. New York sell, and then sell. Okay, and then like yes, we go here, right? Bearish, bullish. Price comes with support level, but still strong selling. Okay, and this is also closing with bearish, right? And if you were to look for the weekly, we would say that okay, we're gonna look for the sell entry for the weekly based on weekly time frame, because the candle is at least like cover in gap more than 50% of this candle. So we can consist to say okay, I'm gonna look for the sell entry like this week. Okay, but where we sell, we need to wait for price to pull back, right? But if not pull back, it was sideways in H4 here. Now it break, we're gonna wait for price to pull back and then we sell. Okay guys, that should be all for today. I think you're learning something for the session. To be honest, last time I don't even bother about like New York, London, or whatsoever. But whenever I use this one, I think it's make me like better, have the better views like what is going on in each session. Okay guys, that should be all for today guys. Thank you so much. I'm gonna catch up with you guys again on next Monday. Okay, same time. All right guys, bye for now guys. Take care and all the best and good luck. And again, if you trade gold, you should reduce your lot size. I know that a lot of gold, a lot of people, a lot of new traders, they lost their account because of gold is so volatile. Okay, very, very volatile. Take note of that. Wow, you can see that. What happening here? This M15, why is so strong? Oh, they clear. Is it they clear liquidity? And now they go up, it's sideways now. If the body close above, you wait for pullback. The body pullback, if they close above, okay, I give you the price here. If the body close above 40, 46, pullback, you buy, you target here. That this zone is about 60. Okay, about 60. All right, guys. All right, bye for now. Take care. All the best. Good luck to everyone. Bye bye, guys.